Attention A1 Trading Show fans. If you're looking to get funded, we've got a solution for you. Our partnered prop firm FX2 Funding helps traders get access to up to $200,000 in trading capital. FX2 Funding is not your average prop firm. We've chosen them as our partner because of their fair examination rules, their professional and available customer service, and they have an outstanding reputation in the prop firm space. Here's a quick look at their evaluation process. First, they don't have a time limit on their evaluations. That means that you can take your time when passing your evaluation. There's no pressure to rush your trading. Second, there is only one phase to pass in their evaluation before getting access to your funded account. Also, their evaluation fees are fairly priced and fully refundable upon passing. Once you're funded, you'll be able to keep up to 85% of your trading profits. Finally, a rule we know swing traders will love: you can hold your positions over the weekend. For a limited time, get 15% off any of their account challenges with promo code A1Trading15. That's 15% off any account challenge with code A1Trading15. If you're ready to get funded, we're dropping a link in the chat right now, and you can also find it in the description down below. So go ahead and get signed up today for 15% off with promo code A1Trading15. Now, back to the show.
All right. And hello, everybody. Welcome back to another live stream here. A big one today for, of course, the NFP event. This is a once a month event where we get an insight as to what the U.S. jobs numbers are looking like officially. Of course, on I believe it was yesterday, Thursday, we had ADP numbers, which is sort of an early look at NFP, and they came out surprisingly high. So today we are going to get the confirmation one way or the other as to what the jobs market is looking like going into July here. Now, of course, July, what we do is on the first Friday of each month, or the first full week Friday, what happens is we present, or we get presented, the data for the previous month. So we are coming into understanding what is happening for June of 2023 with this number here today. So let's take a quick look at the outlook, and then we'll take a quick look at some charts and setups here before the news. We do have about 10 minutes. We're going to be watching the reaction. And as we get started here, do me a quick favor. If you guys would hit that thumbs up button, subscribe to the channel if you have not already, and let's jump into some analysis. Okay, so in terms of NFP, we are expecting 224,000 jobs. That's the forecast right now. Previously, we had 339,000 jobs created. So we are expecting a slow, and this is going to have a lot of impact. If you're someone who's trading gold or dollar pairs or even indices, this news is going to be very impactful to you. So on top of this, another number that is lesser talked about is, of course, the average hourly earnings. This is going to be really, really important as well, because again, this is showing whether or not people are getting raises. What's that looking like? Raises, by the way, would be a negative thing. For like, if this is like 0.4 today, that would actually be really positive for things like the dollar, but it'd be really bad for things like gold, things like the S&P 500 would probably come down pretty hard. And that is because, of course, that would show the labor market is really, really hot, and that can contribute to high levels of inflation, which the Federal Reserve has made very clear they are very much trying to get that under control. So today we are watching to see what these numbers come out to be. Now, if you're somebody in Canada or you're paying attention to the Canadian dollar, you may also have your eye on the unemployment numbers coming out for Canada. We will, of course, cover that, but it'll be less important compared to what I think the global markets are very interested in, which is, of course, the unemployment rate in the US. This is expected to come out at 3.6%, which is interesting. We're expecting it tick down. And in terms of employment change, like I said, 224,000 jobs creation is what is to be expected. Like I said, if you guys would do me just a quick favor as we get started in some technical and fundamental analysis here today, hit that thumbs up button. It really does help just to support the stream here as we get going. So I'd like to start with just the dollar outlook in terms of where we're at. So dollar really still range bound. And I think today could be, of course, we've been waiting to see something decisive. We saw something pretty big yesterday. ADP numbers were able to get the dollar index to break briefly above, but we failed to close above key resistance. And I keep coming back to this range here for dollar bulls and dollar bears today. I want you to keep an eye on these two zones. On your own charts, I would recommend you to draw 103.4 as a level of resistance and 102.8 if we're getting technical, as a support level. So these areas right now, now I'm not saying this from a sense of, well, if it comes down here, just straight up buy it, it's going to shoot back up. Sure, it could stay in a range. For me, what is more interesting is looking for the breakout one way or the other. If the dollar, for example, if we see really strong jobs numbers today, what likely happens is we travel back up, and perhaps if they're really strong numbers, we even break through this 103.4 level, and perhaps a continuation could go into next week. However, and this is the cool thing about NFP, oftentimes can create multi-day trends if something is really impactful. So for example, if this number, however, comes out and we see jobs actually slowing down, that's going to likely cause the dollar to possibly even break 102.85 and perhaps sort of start a downward trend. So today is a very pivotal day for, I think, bulls and bears to watch what happens here. And someone said, I'm literally shaking right now. Let me just recommend to anybody who's new to trading or newer to NFP, please do not gamble on the news. It is a very common beginner mistake. The problem is the spreads, if you're familiar with the spread, right? The bid-ask spread gets incredibly wide on almost all brokerages. They're just doing that to protect themselves. They don't want to take a massive risk by taking the other side of your trade or something like that, where they would just get destroyed by a big news spike. So what brokerages do is they widen the spread tremendously ahead of the news. So you'll notice as we get closer here, the spreads in your brokerage are going to widen. Trying to trade in that is a messy disaster, and it is not as easy as putting buy stops and sell stops above and below price. That is a newbie beginner trading strategy mistake that many people try and do. And unless you are, trading on your own brokerage where you can set the spreads or whatever, the real world brokerages are not going to just let you take perfect entries on a news spike. So again, be very careful with that stuff. So anyways, DXY, like I said, watching for breakouts either direction. We could switch over to gold, and yeah, yes, they do, Sammy. It's just, if I was a broker, I would do the exact same thing, right? If you were a broker, you'd do the exact same thing. It's not predatory. It's simply just no one knows what the news is going to bring. It's going to bring volatility, and the brokerages who are trying to, a lot of them are market makers themselves, are trying to just facilitate liquidity in the markets. They don't want to take the other side of a ginormous green candle. They don't want to have to pick up a bunch of shorts on perfect entries, right? That would be foolish of a business to do that. So they just widen the spreads to account for that added volatility that they're going to have to incur on their books. So, it's not predatory. I think sometimes people just think brokerages are evil. Brokerages are just a business that allow people to execute trades. Regulated brokerages, offshore, unregulated brokerages, they could do some funny business, but big time regulated brokerages, they're not chasing your stops like that. Anyways, let's see, 25, we're at 8:25 a.m. We've got 5 minutes to go here. Let's talk gold here just for a moment. I mentioned this earlier this week. I took a loss on gold, lost about $300. My stop loss was triggered underneath this low. I picked it up on this pullback candle. This pullback candle became more of a pullback, became more of a reversal candle, and we traded lower for several days there. So, or for a few days there. So I'm not in a bullish trade or a bearish trade. However, what I would say for the bulls out there, and of course, in hindsight, shoulda, coulda, woulda, I should have waited for the breakout. Of course, I don't actually trade like that. The reality is you have to trade in the here and the now. I liked what I saw. We had a breakout of this downward structure, right? So I stand by my trade. It just didn't work out. And sometimes that's going to happen. So anyways, what I would say is that for bulls, we're going to drop it down to a little bit of a lower time frame here today. Watch for, I think, this big red candle where we just erased all of our progress to the upside. Watch the break either direction here, because again, we had a lot of support here and we had a lot of resistance here, right? Clearly, we had a massive sell-off if you're watching gold here, off of ADP jobs numbers here yesterday, which of course looked better than expected. So keep an eye on this, guys, because again, mark on your own charts, I would say 1905 and of course the 1927 level, right? So if we break either direction, again, this is more of a swing trade. It's a little bit bigger time frame. I don't know what's going to happen in the meantime, right? The next hourly candle here, I have no idea what's going to happen because I don't know what the news is going to do ahead of the time, right? I'm not a magician. I'm a trader. And as a trader, my job is to manage risk and to look for profitable trading setups as often as I can. So what I'd be looking for if I'm going to trade gold right? If I'm long bias on gold, what I'd be looking for is give me that breakout 1927. Let me see perhaps retest of 1932. Maybe there's some decent risk to reward off of strong fundamental news catalyst today. So I'm looking for that again. Post NFP, gold is one. NASDAQ, I do have a trade open on, so let's get focused here on NASDAQ for a moment. I do already have a trade open on the NASDAQ. I'll show you guys my trade. You guys know, no nonsense. I try and keep it real here. Trying to show you guys my real account on a consistent basis. This is my my account. I am trading NASDAQ on the long side. Picked it up yesterday as it tapped into support. Briefly traded below my zone, but fortunately wicked back up and looked strong. I am still in this trade, and this is not necessarily a scalp or a day trade for me. So please be aware, I am not taking this trade and tossing, I'm not tossing dice on a baccarat table, right? This is something that I've been in for a day and a half now. This is a swing trade. I've got my stop loss below market structure. I know where I'm going to get out if I need to. And if that gets hit today, it is what it is. But if the market rallies, my goal, you'll notice I don't have a take profit on my trade. My goal is to try and trail stops. This was shared inside of our Discord channel. We've got 720 people here. I just want to make a quick announcement before the news. We've got just over 1 minute here. We're going to switch over and take a look at the charts here and watch them together live. If you guys would like to get all of the trade alerts and ideas that we're sharing, there is a way to do that. I'll tell more about that as we get after the news. If you guys would like to join the Discord, we will be trading today, very likely, within this volatility. We love trading volatility. And so we are, and when I say we, there's a couple, Frank and Ivan and myself, we're traders within the group. So I'm going to set up our charts here so we can watch. Got NASDAQ in the top left. Let's do gold bottom right. And then the top right, we've got euro. Let's do dollar yen. So dollar yen top right. And we can keep an eye on this one here. So again, these are all 15-minute charts. Well, let's switch over 15-minute, 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 15-minute. And again, we're coming in about 20 seconds out from the news. I'm going to watch the reaction here, but don't go anywhere after the spike. That's where the real trading comes in. Dice is on craps. Sorry, Tuan. I'm not as familiar with gambling. Breaking news. Here it comes. Gold is shooting up here. NASDAQ also making a move up, euro up, and dollar yen down here off of the initial reaction, guys. Wow, what a move here. Very, very quick succession we saw. Again, NASDAQ pushing up really nicely. This is probably good for my trade. I can check my P&L here. Yeah, so nice. We're seeing a nice push off of this zone. Again, trade alert was shared inside of our Discord channel. I'll mention more about that in a moment, but NASDAQ going well. We're up on the day. Let's see if we can keep pushing though. The question is, can this gain hold? I want to say something about NFP, guys, as we get this spike here. First of all, let's double check the numbers, see what happened. So we had 0.4% average hourly earnings were up. However, jobs creation was down, 209K jobs created compared to what was expected at 224K. And you got 3.6% as expected in the unemployment rate change. Okay, so I would say, this is kind of a win for the Fed. This is kind of a win for well, I shouldn't say this is a win for Fed. This is what was expected. This is not great for the Fed. And this, of course, is a win for the Fed. Less jobs coming out. It sounds weird, right? But again, think about it from the Federal Reserve's perspective. More jobs being created, more raises being handed out. That's going to contribute to inflation because people are going to be out there buying things. Inflation is a big problem for the Fed right now and for the U.S. people and for most countries around the world right now. So yeah, big push up. We'd love to see it. Again, this is great for the dollar. I'm sorry, for the NASDAQ today. Does seem like wages are getting pushed up. So that's showing, hey, businesses are able to afford giving out some raises here recently. NASDAQ trading up. Let's take a quick look while we're talking indices. We'll take a look at SPX500. Yeah, SPX500 following suit. You've got the Euro USD, like I said, making a push off the 15-minute chart, and NASDAQ really making its move here now. Again, we are currently floating at this time $880, $870 in profit. The account is up about $1,600 on the day. We'll see if that is able to hold. Like I said, or like I was going to say, with NFP news, you have to be really careful because, again, sure, the big first spike can make a move, but be very cautious. Yesterday, we had Marco on the show, and you guys may know Marco, or you may remember him from yesterday's show. If you didn't, check it out when you get a chance. He's a great guy. He was making a point that after news events, you do often get large scale reversals. So be very careful when you get this spike. Will it happen on the NASDAQ? I think this is a good, strong push, but we'll have to see, right? So we're reactive traders within our group. We're not here trying to predict everything and not trying to say, oh, well, here's what the jobs number is going to do the market. We don't do that, right? I think that trying to speculate and forecast every single thing the market is going to do is an incredibly difficult way to trade. I trade trends. So price is moving up. I'm looking to be long. Okay. But also on top of that, I look at fundamentals and I say, okay, well, why do I want to buy NASDAQ? Well, I think that the Fed is getting closer and closer to the end of its rate hiking cycle. Now, there may still be some rate hikes coming, but if the market knows, hey, yeah, there's 1 or 2 rate hikes coming, and then that's kind of it, and the economy's still strong, I'd say that's still bullish for stocks, because if the economy's not getting crushed, then they could probably afford to keep going a little bit. And if they're still kind of signaling, well, that's the end of the rate hiking cycle coming, stocks kind of have limited downside and some pretty good upside once those cuts start coming in. There's the bullish perspective. Now, please be warned, I'm generally bullish on stocks longer term anyways, so I have a slight bias there anyways. But again, I'm still in the NASDAQ trade. This is a short-term trade. I do have my stop loss in place. And at this point, if price is able to keep pushing, I will likely trail my stop. I mentioned that I was going to tell you guys about the Discord channel. If you guys are not already inside of the group, you get to see the trades that I'm taking real time. I get alert, or I send out my alerts whenever I take trades. And I want to clarify here, like I said, these are live accounts. When you see me take trades, when you see me share trade alerts, a lot of times signal services are just sharing, demo trades, and they're just showing you the profits and never showing you the losses. I took a loss earlier this week on gold. Here it is. I shared my $310 loss. But today, and between this and GJ, we had 2 really profitable trades. Well, GJ actually came out to just about a break-even trade. But the NASDAQ trade is paying for all of it here on this trade alone on this particular account. We're up about $1,000 so far, which is great. So again, full transparency, I'm not a perfect trader. Nobody is. But I share all of my trade alerts. And if this is something that you would be interested in getting sent to your phone or to your desktop, here's how you can get more information. We do have a direct message center. I don't know, Chandler, do we have anybody in office to help us out with direct messages? Just let me know in the chat or in Discord, either one, it doesn't matter. Yes, we do. Okay, thank you. All right, guys. So what we're going to do here is I'm going to drop a link. So I have a support team that helps out with memberships. If you guys are interested in getting access to these trade alerts, again, yes, it is a service, but I want you to know it's being traded on live money. There's no nonsense. And if you want to join our trading room, we encourage you to do so. We're looking for more serious traders. And if you'd be interested, click this link right now to send us a direct message. And by messaging us, you'll be able to get a discount off of any membership if you do decide to go for it. It's a very educational service in nature. It's meant to help traders watch over the shoulder of people who have been doing this for a number of years. Frank and myself have been trading together for nearly 7-8 years. I kind of forget. It's been a long time now. But yeah, we've been running the group together for a number of years as well. So feel free to join us. Again, NASDAQ still pushing. Let's take a look at that dollar, see what's going on. Dollar down. And this is what I was talking about, guys. Remember, big dollar push to the downside here. Resistance is kind of now in play. And this is, I honestly, I'll be honest with you. I love to see it because I am long some silver. So silver, yeah, nice. So we got silver up today. I've sold puts on silver, so I'll show you guys this trade. Again, another trade that I am in. If you're wondering which brokerage I use, I'm a U.S. citizen, so of course I don't have all the same options that other forex traders have globally. What I personally use is Webull. I do have a link in the description, I believe, for Webull. If you're interested in signing up, if you're in the U.S., you do get free shares if you use my link. You can also just find it at a1trading.com/brokers anyone needs help finding a broker, we have some special perks available to people who sign up with various brokers. So yeah, we have stream partnerships and that sort of thing. Speaking of that, we'll take a quick break. And we're going to come right back. I do want to talk about silver, and I want to talk about gold and where I think it is coming or where it's going next, because there are some trade setups. People have been asking me, Nick, are you going to get back into a gold trade? And I do have some ideas that I want to share with you guys. So we'll be right back. But before we do, just remember, if you guys want access to the EDGEFINDER or our Discord server, we do have a free way for people outside of the US, unfortunately not for the US, to get free access. We're going to share a quick break. Check this out. This is information on how you can get our stuff 100% free, no strings attached. You just have to basically open an account with our partnered broker, which is a regulated international broker. Check this out.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
So yes, thank you for that quick break, guys. Again, thank you to our sponsor 8cap, which makes these shows possible. We've been getting a little bit of flack. I know the regular viewers, you understand how this stuff works, right? We're putting on a show here. There's a lot of effort that goes into these shows behind the scenes. We've been getting some flack for our partnerships recently. I just want to thank the people that have been sort of sticking up for us, just understanding that, this is not a free thing for us to run, right? There's several people involved in full-time jobs that have to get paid in order to make these shows possible. So we do rely on sponsors. And so a big thank you to ACAP, and a big thank you to a lot of you guys who have been in support of us, just kind of defending us for having to run ads in order to pay for this stuff. It's not free for us to run shows and internet and offices and all that stuff, but we do appreciate you guys, and thank you very much for that. So I want to talk about silver a little bit here, guys. So silver and gold, we're going to get to gold as well, has been put in these higher lows. I like to see that. And silver, I sold 2 puts on this. Now, if you're not familiar with puts or calls on option side of things, selling puts is basically a bullish play. Without having to know too much about options, essentially, I am bullish on silver. I essentially sold puts twice. Both of these things are akin to being long biased. Anyways, silver is one side of it. We also have gold to talk about. So gold made a pop here. The question is, can we break? So I mentioned people have been kind of asking me, Nick, are you going to get back into your gold long idea? And I want to talk about this as to why first of all, why I'm tempted to, and second of all, where I would actually look to pull the trigger on that. Okay. So gold popped off of this news, as probably it should have. The real question, price action wise, for the technical traders in the room, what I think we need to see personally is at the very least a break and close above this level as we marked on our charts. Remember, I asked you guys to put 1927 on your charts as a key level resistance, because again, we wicked up into this area. But what really matters to investors and traders alike right now, I would say, is able to actually retake or capture. I like that word. I heard someone use it. Capture this area, essentially break and close bullish on some candle like this. This would paint a picture where, okay, bulls took this back over. They captured this area. Retracements from there would look like, in my opinion, opportunities to potentially take another attempt on the long side. Now, remember, I tried to stay real with you guys. I took a loss earlier this week trying to buy gold around this area. Price dipped. I stopped out. And I'm glad that I did, because it would have been a much larger floating drawdown. Of course, now hindsight, I'd be back to well, not break even, but I would have been able to be back at break even. But again, that's hindsight is very 2020. And you got to be very careful with that sort of thought process. What I'm looking for on gold, like I said, would be strength to resume and actually fill out this wick strength closing outside. We're looking at a 4-hour candle, but we really could take a look at the 1 hour. So let's look at the 1 hour together in reference to this. So again, this candle is not looking pretty for the gold bulls. Again, because we got the move, that's great, but we didn't sustain the move. This is why when I talk about news, I don't like trading the spike itself, because the spike oftentimes does this, or it just moves in one direction and then moves right back, as Marco pointed out in yesterday's video or live stream. What I'm interested in is, can we sustain a move? Another thing that I remember from a conversation with Marco a couple weeks back was when we do get news that closes very strong, he also notices that very oftentimes you do get some push, you get some continuation. So this candle lacking the strength to close bullish is definitely a red flag to me for the gold bullish kind of side of things. Again, what I would like to see would be a close above this. And in that case, any pullbacks I'm looking to get long. Okay. So gold, not quite there. Like I said, I'm in my NASDAQ. Let's see how NASDAQ is doing. And look at that. Don't love to see this. Again, what was a $1,050 trade. Let's go back to NASDAQ. We'll pull it up. Definitely have given back some of that profit. Now only 420, 375. So this one definitely gave back some of its gains very, very quickly. But again, for me with the NASDAQ idea, my stop loss is pretty locked in tight. If we break through some of this structure lows down here, that's going to be a trigger for me to go ahead and get out of the trade. So we're still just like around slightly better than break even, despite that pop. Of course, in hindsight, I would have loved, well, not in hindsight, in truth, I would love for this thing to have just exploded up for the rest of the day, but it still might. And so I've got my stop loss in place for a reason, right? My stop tells me where it's time to get out. Okay. So my concept is hold this thing until we have reason to do otherwise, which for me would be a break of key structure. And my stop is a bit wide here, if I'm being honest. This is a 4-hour chart. I'm being wide with my stop because I do generally like the idea of being bullish NASDAQ. Despite showing some resistance here, I think we probably head back to retest the highs. Let's get this on our chart here. So I'm going to go horizontal ray. I still think that we have potential here to retest the highs. There we go. So again, like I said, we're holding a support so far. As long as we continue to hold this, I'll stay long, but my idea would be a return back up into this area. Now, I also want to address why I also like the idea of being long gold. Part of the reason is because the smart money tracker still looks pretty positive for us here. So what I mean by that is that if we take a look at gold, gold is still, in terms of institutional positioning, very long bias. So big money is pretty long gold right now. Okay. So how do I know that? Well, the COT reports, for the newer traders here who have not heard about the COT reports before, here's just a really quick breakdown. The COT reports tell us week to week, it's a weekly report, the idea behind or the positioning behind what institutional traders are buying or selling. This is not fiction. This is not a guess. This is not even an educated guess. This is from the CFTC's weekly reported commitment of traders data. Big hedge funds are required to produce and share their positionings. So what we have is we have that data visualized here in our software. So when we look at gold, we have the contracts that they're trading on the futures market for USD, for gold, for euro, for the NASDAQ. We have all of that information, right? So yes. So here's the thing, right? In terms of the gold bullish idea, 76% long, majority of the positions there are on the long side. And then if we could flip to the other thing, we could take a look at like the Japanese yen, right? The Japanese yen is about 80% short. So a big majority of institutional money is on the short side of the yen and alongside of gold, long side of dollar, long side of euro. By the way, guys, if you would like access to this data, we are offering tours and trials to the software. If you would like to schedule something with us, or if you would like to go ahead and get your hands on the software, take a look at it, get some answers to your questions kind of thing. Right now, we're going to drop a link in the chat to sign up where you can actually get more information and check out the free trial opportunity. So click this link. We're going to drop it in the chat right now. There it is. So click this link, try out the Edge Finder, check it out here. Click this link and it will take you to a form where you can apply for more information about the Edge Finder if you'd like to try it out or check it out for yourself. We do, of course, this is something that we sell, but we like to let people get a chance to look at it, ask their questions. We want to make sure that's actually a fit for you before we sell you a software tool like this. So again, schedule something with us if you have any interest or you've been watching the streams for a while. There you go. NASDAQ 100. Yeah, NAS100 gave back a lot of its gains here. So yeah, really quite the move here this morning. Again, in hindsight, of course, it does kind of make a little bit of sense. You have some mixed sentiment. You had employment change was less than expected, but average hourly earnings were stronger than expected. They were higher than expected. We haven't even talked about Canada. Canada did have an uptick in unemployment rate by by 2.2% compared to the 0.1% they were expecting an increase. The actual here for Canada, though, really strong in terms of CAD numbers. Wait, hold on. Let's look at CAD JPY, for example. CAD JPY, yeah, shooting off the lows here. CAD JPY, USD CAD. Coming down here again, Canadian dollar strengthening a good bit. The dollar is gaining back a little bit of its ground here. Yeah, look at that. So, and look how this candle closes, guys. This is a 1 hour candle close that is really going to be interesting to watch. We've got 10 minutes left on this. And if this candle closes back inside of this range, it's possible that this is not necessarily just a full blown bearish move going on. If bulls can't, I'm sorry, if bears can't hold their gains underneath this support structure low, I would just be very cautious looking at that. Yeah, so something to think about there. Now, guys, we're going to bring in Kenzo. He comes on once a week. Extra Hot Forex is his YouTube channel. We're going to say hello to Kenzo. But before we do, we're just going to take a quick break and we'll come right back to ask Kenzo some questions as to what we are looking at here. So we'll play just a quick break. We'll be right back with Kenzo. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, and we are back with Kenzo. Hey, Kenzo, how are you?
Great, thanks, and you, man?
I'm good, and welcome back to the show. So I was just mentioning before our break there, Kenzo comes on our show once a week. We take a look at the markets together, and what I always appreciate about having Kenzo on the show is that we get a nice mix of technical and fundamental analysis with Kenzo. Yesterday, we were very technical. Today, we can get a little bit of a mix of both now that Kenzo is here. Kenzo, what are you looking at here today, and what's your reaction to the numbers that we got out of NFP today?
I can say, actually, NFP disappointed. We have some mixed actually news, so that is not actually interesting. Plus, we have actually the news were not, even if maybe NFP actually unemployment change went a bit lower, but it's not really aggressive. That's why we don't really see aggressive sales or buy. So that at the end of the day, we have to go back and think about interest rates. So this is not actually enough. So it means our next move is it will be just checking a CPI if maybe there will be a change. But for NFP, to me, it's disappointing. It's not really that much that can move the market, you see.
Sure. And we have, of course, you mentioned CPI as possibly our next major catalyst. That's another thing. If you guys tune into these shows, even if you're not necessarily a fundamentalist or you don't have as much of an interest, one thing that you can always kind of rely on is we are constantly talking about like the next big catalyst for the markets. And Kenzo, you made the point just now that we do, of course, have CPI coming out next week. On Wednesday in the morning, we do have our report, which is the inflation figure here out of the United States. All eyes will be, of course, paying close attention to headline CPI, but also very closely on that core CPI number to see if some of the stickier areas of inflation are actually going to start coming down or if they're going to stay pretty stubborn. So Kenzo, in terms of charts here today, dollar is down a good bit. We did see a push lower. And then, of course, we talked about gold here earlier. Gold attempted to break out around 1927, but the candle is pretty mixed. To your point, we did get some back and forth conflicting data here with the report, with, of course, less jobs created than expected, but the unemployment percentage rate stayed the same, and wage growth actually was a little bit more than expected. So all those three things kind of a little bit back and forth. So Kenzo, in terms of chart setups or things that you're watching out for, what are you looking at here today? Do you have any charts you want to share?
Yes, I was actually looking at gold. I thought maybe if that negative was aggressive, I was expecting maybe to see a breakout on this resistance around this area before maybe I should look for a buy, because on the bottom side we have a very nice support, but we need a push from the fundamentals. But the fundamentals, they are not really that enough. So I will just wait for gold for now and wait for a breakout. So on other pairs, which is NASDAQ, US30, not also interesting, because if you remember yesterday, we also had unemployment claims, which were actually in favor of the dollar, but not really that much. So also on NASDAQ on my side, I can see that we have a very closer resistance, and we also have a diagonal support. So I'm just waiting for a breakout, but it seems like since we know that there is a chance for the rates increase, I think we might expect some sort of a sell, you see.
Yeah, and that will be a question again to your point about CPI next week. It'll be a question for CPI, I imagine. If that core CPI still remains very elevated, it starts to call into question, is that 2 rate hikes likely to come down the channel? And I think, there is this interesting divergence in the market right now. Kenzo, we have the stock market, which just remains so bullish, so willing to rally on anything.
Yes.
Despite that, though, you do see yields rising, which, of course, when we talk yields, we're talking about things like the 2-year, which is a great way, by the way, if you guys are trying to keep up with, central bank forecasts. The 2-year is probably one of the best bets that you can get. When it's trading higher,
Yes.
what this is telling us is that inflation expectations are still high, and that interest rate hikes are also expected. And so we see this remaining very high. So what's interesting there is that the stock market is trading up. Bonds are kind of selling off. And with that, again, the yields are rising pretty tremendously. So from a fundamental perspective, it's very interesting because you have kind of 2 stories playing out. You have the yields rising, which is showing they think more rates are coming, more rate hikes. And then on the flip side, the NASDAQ is trading higher. So one of these things probably has to give. But at the same time, I wonder, Kenzo, if there is a possibility that further rate hikes still come down the pipeline, and yet the stock market stays resilient enough to kind of shrug them off and keep pushing higher. It seems to at least be the case that I guess index bulls are kind of pointing to right now, is that, yes, a couple more rate hikes are coming, but the stock market the economy is strong enough to contain those, and then they're going to kind of fall to the wayside, and the stock market just has a free, an open runway, if you will. What do you think about that? And I guess, would you be trading? Are you kind of short biased on the indices and just looking for breakouts, or are you also still looking to be long?
The overall picture is on my side is actually going long, because even though we're still talking about increasing the rates, but the thing is, what's next? What's next after they increase twice? Because if they say they want to increase twice, so what will happen on the 3rd time? Will they pause? Will they cut the rates or do something? So, and mostly they like to keep their weight. Obviously, there is a chance that they can increase or pause, obviously. But what will happen after that? I think the market is also thinking for more than 6 months. If they increase the rates now, but it means it's going to be a good time after those increases, which means it makes the stock market interesting now actually to still hold those positions, because I think they're trying to tell us that we only have 2 increases. So maybe next after that, we might cut or pause the rates for quite some time. And that is going to be good actually for the market. Plus, the companies are doing great, obviously. And at the same time, it's towards summer or December. So we will see things going very nice. Retail sales, I think they're going to increase. And at the same time, these companies, they're going to actually perform very good. At the same time, as long as we expect them to increase twice, it's no longer a bit of a surprise. But my question is, what will happen after that? Which means I think we have a light at the end of the tunnel, maybe. So that is actually bad for now, but I think we have something good happening after the increases.
Yeah, and that's a good point. I think that perhaps a cautious way to approach it would be not to get necessarily overly bullish in the very, very short term, but to be open to the idea that, you know, there could possibly be, like you said, that light at the end of the tunnel. You know, after they kind of get done with these last 2 rate hikes. But we'll see. Again, they've remained pretty vague and saying that they're quote unquote data dependent for a while. So we'll just have to wait to see what they get. You also mentioned something about the summer months. I just wanted to point out July and August, both are historically, I'm sorry, summer months, of course, for our side. I know it's getting cold where you're at. But in terms of months of the year, we have July and August here being expected to be, at least historically speaking, from a seasonality perspective, expected to be positive, right? Last 10 and 5 years, we saw positive months. Where we do see some slide is actually in September and a little bit of a mixed sentiment in October, at least in the last 5 and 10 years. So seasonally, we would expect some strength here, as we've gotten so far this year in May and June. We've got some strength. July, we'll see, right? We're still in the midst of July now. But again, August, also positive expectancy. This is, of course, off of our seasonal trends data tab on the EDGEFINDER. Kenzo, I want to thank you for coming on. I know it was brief, but we've got a busy schedule here today. So I do want to thank you for coming on. I know you're busy as well. So thank you for making some time to come on the show, as you do each week. And before you go, guys, make sure to go subscribe to Kenzo. Here's his YouTube channel. It's Extra Hot Forex on YouTube. He's full of stuff to help you out with your trading. If you're looking to learn something, if you're looking to just watch somebody who's in action doing it, Kenzo's the guy for you. So make sure to go subscribe to Extra Hot Forex. And Kenzo, thank you for coming on the show.
Thank you very much, man.
All right. Yep. Always good to have Kenzo on. It does a great job just kind of breaking things down from a fundamental and technical perspective. So shout out to him and make sure to go follow him. I was just mentioning, guys, the seasonal trends data we have for July as well as August. This, of course, is available for all of the different currency pairs as well. If you're somebody who trades things like GJ or EJ or pound dollar or gold or indices, it doesn't really matter. You can select anything you'd like. So here's, for example, GJ. If we wanted to take a look at euro yen, we could take a look at euro yen. All of these are really, really simple to use graphs. This essentially just shows us month to month averages for these particular assets and currency pairs. So it could be really useful. If you guys don't have access to the EDGEFINDER, remember we did mention this earlier, but if you would like some more information or to hop on a call or to schedule a meeting, whatever you'd like, if you'd like a trial of the tool, here's how you can get more information. Click this link that we're dropping in the chat right now. This will take you to a sign up form where you can sign up for more information and to see if this tool is for you. Try it out, click this link and get some more information. Thank you guys very much for tuning in to today's live stream. That's going to wrap it up from us. And from us at the A1 Trading team, have a great weekend. Thank you for being here, and we'll see you next week.
And that concludes today's show. Our goal at A1 Trading is to keep you up to date with the latest market coverage through our daily videos and articles. If you like our content, make sure to subscribe for more. You can get funded today up to $200K with FX2 funding. Use our code A1Trading15 for a special discount. From all of us at A1 Trading, have a great day, and we'll see you next time.